All right, guys, for today, Thursday, it's Wednesday. Is it Thursday? It's Wednesday, the 13th. But the date's irrelevant. The content is. What do we have? On the open, we were 10 or 12 points in the S&P lower. There were more headwinds potentially right before the open. Powell, Fed chairman, right on the open, released some kind of hawkish comments, and we broke them in here. No, it was more in here. This sell-off right in here from 82 down to 78. And then they had these impeachment hearings, which you would think would create more uncertainty than certainty and maybe eggshell moment. You could see where we were before. So what I was talking about is if you look at a chart and you're told by yourself or someone else, just tell me what you think here. Don't look at this or there. Just tell me what you think here. All right. You can even blow up the chart to only show what's going on here. What I was talking about is, all right, this is bearish, but if it was bearish, you think we'd rally this hard, this fast out of the hole like that for no real reason. And so you have to put horns on. It doesn't mean you got to look for a place to buy it. Doesn't mean you have to play it from the long side, but you have to respect that the market was weak for good reasons. And all of a sudden it does that. It's not supposed to do that fast, that quick, unless there's some underlying strength, and you got to respect it. And so you generally get a pop, a retracement or chop, and then another rally, which we got. And that was be respectful if you're trying to sell it to this pop. The number one thing I try to do for people in this trading room is to keep them, the number one mandate is to keep them off the wrong side. Picking good locations in real time would be a close two, but to keep them off the wrong side and keep them very careful managing the risk is always most important. So the bullishness is seen back when, if you look at the right side of my screen, back when you see this pop out of nowhere. Is there something down in here? Maybe, maybe not to get you long, but you got to respect the pop. The reason why you generally can get subsequent a probability of a subsequent rally like that is because everybody looking to get short gets stuck and becomes a self-fulfilling prophecy. Let me walk you through that. If it's bearish in here and it's maybe obviously going to open up weaker, people are looking to get short and they get filled and take nothing but immediate heat. I don't mean 1, 2, 3, 4 people. I mean people looking to get short to catch more downside. And they get caught, they get trapped, and they turn to buyers. Because if you're short and you take nothing but heat, you turn into a pretty anxious buyer, don't you? So that's where you get this chop and then the next pop. Now, something else interesting happened after that we covered in real time, and that was the market gets choppy. You also have to understand where you're at on the map. And I told people, if you're looking for the next rally, you got to be careful because where you're at and where we just came from. They just rallied 8 points. So the market comes off and retraces. This retracement isn't that bad. This one is. And it gets me to think, well, if it was that strong, why did it come back that far? So I told people, be careful getting long. Now, the market does rally, and that's fine. After this happens, I said, listen, this is the confusing, put the horns on in here, take them off in here, put them back on. The reason is because you should not have rallied this far on this pullback. Now, remember what I said earlier. Just judge what's happening from this point forward. The market's strong. Retraced a lot. Maybe it's not as strong. Now it comes back and rallies a lot. Maybe it is as strong. So you take it from that point to this point, and you just measure that segment. And this is a pretty good retracement of this move lower. So you got to put your horns back on. Whether you buy it or not, most importantly, you're cautious of getting short after you see this read on a chart pattern. You could dig in and look at flow and look at stuck sellers and things like that. That's important to get you on the team for this rally, and the market grinds up. This pullback is not that deep, because you measure it from here to here, less than 50%. So the strength is still kind of intact. You get the rally. At 91 even, we had talked about what I had seen and some other things I look at, a temporary top. Why? Because we identified that a lot of shorts might have puked around 91 even. And anytime a lot of shorts puke, generally that's a temporary top. And it was to the tune of a few points, came back up there, and has just drifted amid the hearings in Washington on this impeachment. And like I'll leave you guys, like where we're at now, you can't be surprised unless another shoe drops in this impeachment if they just keep grinding up. We're still underneath the all-time highs in yesterday's high. We're in the middle of yesterday's range. Obviously, we're at the top of today's range. But when you're looking at something that could affect these markets, you need something that hasn't already happened. Right now, everything that's in the market with these impeachments, as far as that is concerned, hasn't worried the market, or we wouldn't be where we're at right now. Something else has to happen in that impeachment story to roil these markets to the downside. Something that isn't already leaked or out there or in these testimonies. Could that happen? Absolutely. That's why if you're watching these markets, you got to listen to these hearings, even if they bore you, just in case there's an outlier. You should also know what an outlier is for a particular story. You should know what's baked in this story, so then you know what would be a surprise. And that goes for this story or any other driver that it's your job to stay on top of. And it's actually interesting to stay on top of stories because they affect what you're trying to do or what you are doing for a living. And so it should be interesting to know enough about this whole impeachment story, enough about U.S.-China trade, enough about oil supply, if you're a crude oil trader, geopolitical events. That's what's one of the more fascinating things of being in this business for almost 25 years for me, is that I feel like I'm well-versed on everything because it's important with the effect that it could have, cause and effect-wise, to what we do.